What's going on, guys, and welcome back to another video. So it was requested a number of times now that I cover 3 topics in today's video, and they are: firstly, which brokers I'm going to use going forward; second, what my goals and plans are for investing over the next few months; and third, a scenario that everyone wants to be in is what you should do if your own premise of investing is dollar cost averaging. However, some of your stocks are up about 60 to 70%. So I'm going to discuss my plan of action for my portfolio in this video as well. But just before I get into all 3 of those topics, I just want to say thanks very much to everyone that has subscribed so far. We hit the 1000 subscriber goal about a week ago at this stage, which was my main target, and we're already up another 109 subscribers, so thanks very much to every single one of you. And with all that being said, let's dive right on into today's video. Firstly, let's discuss my plans in terms of my investing amounts going forward. At the moment, we can see on the left, we have about €8,080 invested and are up 15% or €1,050. That equates to about 9,600 USD and about 7,000 sterling. When I began this channel, the overall goal was to get to €100,000 invested into the market, so we're about 8% of the way there at the moment. So for the rest of 2021, again, it would probably be a lot more, but we are saving for a house currently, and we have a wedding coming up next year as well. So as you can imagine, the vast majority of our savings are going towards them, which is no surprise. So by the end of this year, I'd like to be aiming for about 15,000 invested in this portfolio. Now again, that could be on a lot of factors as well. For example, the market is in a kind of a bull market at the moment, and a lot of people are suggesting that we're in a bubble, so if the markets did tank a little, that would obviously affect my overall outcome for the end of this year. However, if the markets continue to go as they are, and the amount of money we're currently putting into our portfolios during each month, I do feel that 15,000 is a reasonable enough target. So that's probably my goals for 2021 in terms of investing. In terms of what brokers I'm going to use, obviously on screen right now we have Trading 212. That's my main broker at the moment. However, we also have a DEGIRO account. That is another discount European broker that I'll show on the screen in a few seconds. But as you know, if you're outside of the UK, you're only entitled up to €20,000 protection on both Trading 212 and DEGIRO in terms of assets. So that is kind of concerning. Again, it's fairly unlikely that any of these brokers will go bust, but again, you have to protect yourself. So because it only has €20,000 you're protected by on both of these brokers, I do think once I hit the 10,000 mark on Trading 212 that I will start to commence to put further capital into DEGIRO and kind of leave Trading 212 at about €10,000. So DEGIRO was the original broker that I used when I started investing last year. You can see there's only about €5 or €6 left in this account. However, you do have to pay about a 50-cent commission anytime you trade, and that's a small price to pay really in terms of getting extra protection by not putting all your eggs in one basket, in my opinion. So by spreading out your risk just like you would in shares, it's just as important to do this with brokers as well, in my opinion. Now, it's not just the only reason of diversification is why I'm having a second broker. There's a few other factors as well. Firstly, that I've documented in prior videos recently, is that Trading 212 are now starting to charge commission in terms of FX impacts and also for depositing capital. So it isn't really completely free anymore, which kind of brings DEGIRO back on par in my opinion. And there's other reasons as well, such as on DEGIRO, I can invest in my home market, which is the Irish Stock Exchange. I cannot do that on Trading 212. And again, probably a very, very small fraction of my capital would be in this market, as I'm predominantly within the US market. However, it's still good to have the option as well. And as I mentioned in prior videos, when I did a comparison between these brokers as well, they also have other markets and features that Trading 212 do not have. And vice versa as well, Trading 212 also has features such as their fractional shares, their pie feature also, that DEGIRO do not have. So again, it's kind of just pros and cons on both. So I think by having both of these brokers, and again, you could have any brokers, these are just the ones I use. I'm not getting paid or anything to advertise these. So that's just my own 2 brokers of choice at the moment, and that could change easily down the line as well. That's the first 2 points covered in terms of my goals for 2021, and second of all, my brokers I'm using currently and what I'm going to do going forward in terms of brokers as well. If you have any questions on 2 of those topics, again, I can do a more in-depth video if you wish, so just comment below if you'd like one of those. And thirdly, we're going to discuss probably the most important factor here is taking profits. So when I started investing, the overall premise was to dollar cost average and have a long-term outlook on investing. So we started off with numerous companies and we kind of chopped and changed. But over the last few months, we've kind of stuck to 30 blue chip diversified stocks, which are we see in most of my videos on the left here. We can see such pies and investments. Sorry, gonna back up my screen. So we have pies and investments on the left here. So my overall premise was dollar cost average, as I said. So it was all about patience and kind of waiting for the dip as such, which is quite an easy way of investing, but in my opinion, it's very effective. However, over the last few weeks, and again, this is probably a good kind of scenario to be in, that most of my companies, probably 28 of the 30 at the moment, are in the green. For example, if we scroll down here on the left, Alphabet is up 43%. We then have the likes of Bank of America up 56, Caterpillar is up 46, we have Chevron up 48. If we keep going down, Exxon Mobile is up 73%, Goldman Sachs is up 72%. If we keep going down again, we have the likes of JP Morgan and Chase up 58.6. And finally, if we kind of go down just at the bottom here as well, we can see that Vanguard, the S&P 500 and FTSE 100 are up 16 and 19%. Walt Disney is up 53%, etc. So just one question there before we carry on is if anyone knows how to keep your actual screen on screen, should I say. If you click anywhere else on the screen, it kind of goes away. So for example, if I just clicked on the screen here, it goes away and it comes back once I click back in. But it'd be kind of handy if anyone has a suggestion on how you can actually keep this locked on the screen as such, so I could click around the screen without losing the video. So in terms of taking profits, I'd be interested to know what your opinions are on this matter. Again, one of my suggestions that I was thinking about last night before making this video was actually, let's say my top performers that are up 60 or 70%, maybe cut those down and then put that additional profit back into my worst performing companies that may be in the red at the moment. For example, if I had a cap of, let's say, 50% in the green, once any company goes above the 50% mark, to shave it back to the 50 and then use that additional profit that we've earned to pump into my worst performing stocks, as I said. So I do feel that would probably be the most appropriate form of kind of adjusting my portfolio in terms of rebalancing. But also, it's kind of worth noting as well that if I didn't do that and just left all the companies continue to go in the green, firstly, I'd rarely have a chance at dollar cost average again if all 30 companies are continuing in the green. And second of all, some of these companies that are up 70 or 80% at the moment, I do feel going forward that they could easily dip because they are really kind of overvalued at the moment, in my opinion, some of these stocks. And the overall market probably is as well. We can't really lie about that we do feel that there is a potential bubble at the moment. The second option that we have then is, because we are now up about 15% or €1,050, is to sell the full portfolio and then start again, if that makes sense. So let's say you sell all 30 stocks and then start again, dollar cost averaging from just like day one, where obviously we'd have a lot more capital now because we have a lot more invested and we have a lot more profit. So let's say if we sold the full portfolio and then started off with one share within each of the 30 stocks again, and then slowly dollar cost averaged just like we've been doing all along. Now obviously there's pros and cons to that. One con that comes to mind would be tax. So in Ireland you have to pay capital gains tax if you make over €1,250 in any tax year. At the moment we're about €200 away from that. So if I did sell now, we still would be under the threshold, which means we would not pay any tax this year if I didn't sell anything else. But a pro would be that we'd lock in the profits. So if we sold everything now, we'd have that €1,050 locked in. And then, again, as I said, we'd be starting with one share in each of these positions. So again, because we'd be dollar cost averaging and we'd have a tiny position at the start again, we would really be getting in at better prices and effectively driving up the overall portfolio value, which is the main benefit here. So I suppose in essence, there's three options here that I'd like to know your opinions on in the description below. Firstly is to leave as is and continue as I'm going. Second of all is to shave down some of the profits in terms of the top performers and kind of have a cap on, let's say, 40 or 50% in the green before we start selling off and putting the extra profit into my worst performing companies. And the third option again is to sell the full portfolio and to start kind of with one share in each of these 30 stocks again. And again, this would give us a lot bigger overall capital to start with as well, because we've earned a lot and saved and invested a lot more, should I say, over the last few months as well. So that's the three options. It'd be very interesting to see which one you think I should pick going forward. So that's pretty much it for today. I just wanted to go through 3 points that were suggested in the comment section over the last few days. They were my goals going forward in terms of investing. what brokers I'm currently using and going to use going forward, and third of all, my plan of action in terms of taking profits on some of my positions that are up 60 or 70%. If you found this video anyway interesting or helpful, it'd be much appreciated as always if you're new around here to consider subscribing to the channel, as it would really help the channel out going forward. And again, if you have any questions, comments, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. Thanks very much, enjoy your St. Patrick's Day, and I will see you all in tomorrow's video.